What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers here on the left. We have the broad market, comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. I'm sure by all of the circles, once again, you can tell some important names are reporting earnings this week, so we'll discuss some of those names, but also the broad market kind of wound up exactly where it started this week, so we'll talk about what that could mean for the future and how we're going to go about trading that this upcoming week. And if you think someone you know could benefit by this type of analysis, feel free to share the video. And lastly, before we get going, all of our free resources are linked down below in the description of this video. So jumping right into our SPY weekly chart, there's two things in each category for the bulls and bears that I want to point out for you. So we have bulls here, BU, and then BE for bears over here. Let's just draw a line down the middle. First thing is first, for the bulls, what we have is the hold above our resistance trend line, so RTL. We are still trading above that, and the other thing, of course, is our support trend line. We are trading above the support trend line. So two things for the bulls, and now the two things for the bears is just the fact that we have an inverted hammer. So the structure of this candle is rather bearish, the inverted hammer. So we'll draw that in like that, indicating that there is some selling pressure up there where the wick of that candle is. And the other piece that's sort of more bearish, if you will, is if we remember our support, or rather consolidation box zone, where are we in relationship to that box? Of course, the upper end, right, at the resistance portion. So at the resistance, res, of consolidation box, CB. Okay, so these are the types of things that I'm looking at here and balancing, weighing out what's more important than the other when I'm looking at weekly charts. And the analysis here on SPY is indicating that we're actually pretty neutral. You know, there's no clear sign yet whether or not, are we going to go lower or are we going to go higher based on the weekly chart. Of course, the inverted hammer would lead me to believe lower, but the fact that we're holding on to our support trend line, the fact that we're still trading above our resistance level breakout there is all still kind of bullish to me. So we're going to have to break it down further to see what we're looking to expect. So coming down into the daily chart, what changes our perspective here is the fact that we have sort of a indecision doji forming at the support trend line. So that's sort of a bullish sign, right? You want to see longer tails start to form at that support trend line. That way we think of the buyers stepping up, pushing prices higher. It's also at a horizontal support level at 319.06. So that's kind of a super support there. One more check mark for the bulls, if you will. The other thing that we're looking at is the fact that we started to get into the gap here, right? We have our gap from 325.81 to 332.12 just about, and we got into the gap, but we didn't really get that quick snappy fill up to the gap fill that we wanted to see happen, right? There's little to no market structure in here. There should have been no reason why the bulls here on, what would this be, Wednesday, shouldn't have been able to push up higher and higher and ultimately close higher than the previous day, but also get more acceptance into the gap. So that is a check mark for the bears, if you remember our sort of back and forth here. So what we're going to do is just point out some levels to trade off of now. Of course, we're going to move our gap fill or gap level up. So now the gap fills between 327.24 to 332.12, still up there, nothing changed up top. But the fact is we still have to battle back up through our 322.86 level, which is, if you remember, resistance from here, triple top in this area, and then one more data point in here. So we have to battle back up through that before we get even into retesting the bottom of the gap for any more upside continuation. Also remembering the fact that we are at the upper end of our consolidation zone. Could this potentially be a look above and fail where we come back down into the range, in which case the targets become lower? Of course, we don't want to see a move all the way back down to 300, but that ultimately could be the case if this, in fact, is a look above and fail. So targets to the downside that we want to be paying attention to this upcoming week are going to be 319 whole dollar. If we go lower than that, you can tell it's a pretty critical support. That's where we bottomed out there on Friday. As you remember, that's super support. Support trend line and horizontal level. If we go lower, we have 317.50. Anything below that, and we're looking at sort of a back test of the resistance trend line breakout, which, some people pay attention to that, some people don't, but I think it's just one tiny little data point that you could consider. And then lower, we have our 314.30 level based on all of these critical supports in here. I think that's the key line in the sand, at least for me, for maintaining this little uptrend that we're in. If we think about forming higher lows to maintain this uptrend, that would be the area that we really want to see it pull back into and hold. That way it's still higher than our previous set of lows that happened in this area of the chart. So that's what I'm watching for, worst case scenario early on in the week. But if we go lower and start to give up this uptrend, then there's, we're still covered. We have supports below. We have 312, remembering all the touches in here. Lower than that, 307.90, so 308. I'd watch for that 50 SMA actually to start to coincide with the 312 level, form a super support down here if there were to be any sort of catastrophic break. Again, I'm not anticipating that this happens, but if it does, then you're prepared with all of these levels. And of course, 200 SMA in between the 308 and the 300 level. 300 is ultimately not a place we want to go down to, but again, that is the ultimate psychological support level that you should be paying attention to if there's a crazy market flash crash or something like that. Again, not saying that any of that is going to happen, but with earnings coming out, with a really indecisive week, with low summer volume, I think the potential for chop and anything to really happen is there. So now you're covered. You have all these levels to trade off of. Use them wisely, and hopefully you wind up green on the week. Let's move on to the Qs. Moving on over to the Qs now, of course, we have more of a potential for movement in the Qs because we have tech earnings coming out this week. Qs tracking techs, I think it makes more sense that we'll see some movement here, and it will ultimately influence the direction of SPY. So remembering that push and pull, SPY looks like it might be ready for a pullback as indicated by that inverted hammer, and then, flirting with that trend line. And the Qs already have started to give up the support trend line. Again, remembering it has taken a few days in the past to resolve, but we've never actually closed below, other than this one time here, the trend line. So that's an important distinction to make there, is that we've now closed below it. Ultimately, will we see a pop back in with positive earnings, or will we see a little breakdown below here based on negative earnings? And that will ultimately correlate with the SPY pulling back, remembering that. But if it pops back above, SPY could essentially go sideways like we saw this week. So those are the things that I want you to pay attention to in terms of the push and pull. In terms of targets here on the Qs, if we go upwards, then we're looking at first having to battle back up through a very critical previous support, which is now resistance, fundamental principle of technical analysis there. That's at 256.50. Anything above that, we have a resistance point in here, 260.89. Higher than that, we have a level in here from sort of these double tops, and then it acted as support there. So that's at 262.77. If we go higher, what I want you to notice is that we actually set a lower high. So we have the all-time high at 269.79. This week we actually set a lower high here at 268.40. So is this the start of a downtrend is one of the questions that you have to be asking yourself. What we define a downtrend is lower highs. So lower highs and lower lows, which we, have seen in, develop this past week. So is this the start of a downtrend, or is this just some sideways action? Are we going to pop back up into that bullish channel? All things to be considering. To the downside though, let's say our 251.15 support breaks from Friday's tail there. We're looking at a move down to 246.56, in which case our 50 SMA will start to coincide with that level forming, you got it, a super support there. Expecting a first touch bounce, but if we go lower, we're looking at 242.50 and then 237.47. I just round that to 237.50 as supports below, remembering that last one there, 237.47, is the previous all-time high, back from in, 2019? So remembering that, or 2020 actually, February 2020, that previous all-time high will be the ultimate support that, very similar to the SPY 300. We don't want to go below that. And lastly, checking in on IWM, Russell 2000, and the small caps. What's interesting about this chart is that although we had a pretty, significant up and down range across the broad market in the Qs and SPY, something like that, remembering that's kind of like our inverted hammer, if you will, where the range closed down here, very small tail, very large upper wick. The IWM has a very tight range, very, very narrow trading range here this past week. So what's interesting about that is the fact that we still have key support below. We haven't failed to give that one up yet at 145. We did close below our support trend line, but we've done that in the past, so I'm not incredibly concerned about that. This, is obviously an example of that, and we resolved it to the upside on a nice gap up. But what's concerning here is that on a couple of these days, it looked like we should have been breaking out of the balance. On, this day here, Tuesday, we got a clear breakaway above our 146.87 level, and we were unable to continue higher. We tried again on Wednesday, didn't happen. Thursday, didn't happen. And Friday actually closed lower. So what's interesting here is that the buyers are getting no traction up above our 146.87 breakout level. And what's likely now is that, we ultimately want to see either a retest and go back above our 146.87 for a breakout higher, in which case we have now even more traction in this area, more resistance to battle back up through. We'll just split the difference here, call it 149 to get back up through. Or the other scenario is the fact that we could break down below our key support at 145 and see a nice little flush to the downside at 142 on the dot, in which case 50 SMA, super support there as well. Anything lower, we have our 139 level. Lower than that, we have previous triple bottom in here at 136.31. So, the scenario that I'm watching for is a break out of this tight range in here. Anything over 146.87 or below 145 should ultimately dictate where we go this upcoming week. And I think, again, look to the cues and the SPY to indicate, what the tug of war is going to push and pull the IWM's direction in. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Be sure to hit the thumbs up button and also subscribe to the channel. That way you know every single time I drop a new video. One quick note on earnings before we get going is that a company can beat the expectation and the stock price can still go down. And the opposite is true as well. The company can miss the expectation and the stock price can still go up. So for that reason, earnings truly is a gamble. And with inflated premiums due to increased volatility, I think you're just not setting yourself up for success to trade options through earnings. So if you do decide to trade them for some crazy reason, then just know that you should limit your risk by only trading with what you're willing to lose if you go into a earnings trade with options. So jumping into Apple right off the bat, I want to give you some direction based on what the chart is telling me now, but of course this could all be obliterated with earnings coming up here on the 30th. So what I'm seeing is a hammer candle that's formed now that we've broken our support trend line. The support trend line has acted quite strongly for ever since late March, early April. And we're just now starting to see the first significant pullback. So this, in my opinion, is going to be a buyable pullback here in Apple. If we see a bounce and continuation to the upside, we first have to clear this resistance at 370 to 372. Anything above that, we have 378.81. And then our little balance area that formed in this area of the chart where value was established, if we look at the volume that was traded in that area, that should act as a magnet and essentially suck prices back up into it if we continue in the upwards direction here. Anything above that, the double top just before our all-time high resistance is at 397, and then of course $400 psychological resistance will come into play as well. To the downside though, let's say earnings plummets this thing downward, our levels below, if Friday's low breaks, of course our previous breakout level will provide support at 350-341. 50 SMA is coinciding with that as well, should provide a super support. Below that, a double bottom at 344.93, so 345 let's call it, triple bottom below that at 334.67, and then the previous all-time high was here at 327.31, the previous breakout all-time high, that is, from back here before ultimately the dip happened across the market. So that's what I want you to be paying attention to should anything crazy develop with earnings. You have targets up and down. So checking in on Netflix, based on the candle structure that's happening here, I'm sort of in the camp of wait and find out more information. If we go over our 488.58 resistance, then I'm looking for a move to come up to here at 510.84. Above that, we have our 528 level, and then after that you can tell very little market structure in this area of the chart up here. Ultimately, I'm sure there's some intraday levels in there that you could go in and pick out, but our all-time high is the next resistance at 575.37. To the downside though, if this doesn't resolve, let's say we see some balance in this area early on in the week, then we break down below our 467.07. We have a support below at 50 SMA. Excuse me, we have the 50 SMA coinciding with that. Sorry, that's what I meant to say. At the 467 super support area, if it breaks, looking for a move to retest our support trend line, striked from in here. Anything lower, and we have what we would call a filling up the triangle pattern, where we have a triangle that looks like this. And if that support trend line breaks, we're filling it down to our next support below at 427.82. We don't have earnings to worry about. That already happened. Very lackluster. Just starting to see more of a meaningful pullback here in Netflix now. So again, I think it might be a buy at the support trend line, but if we go lower, we have levels mapped out. 405.50, the next one below that, and then ultimately 381.47 from way back here. A breakout level should provide support as well. So we've already made it through Tesla earnings, and it was really lackluster, not really moving prices in too far of a direction one way or another. We have this symmetrical triangle that we talked about. We saw the break to the upside, ultimately ran into some strong resistance up here, and now we're back down here. So again, very similar to Netflix. I think this candle is telling us to wait for some more market direction. Anything over our 1462.96, I think we could retarget our 1548, and above that our resistance area in here around 1652 to 1675. Let's just round them off there. To the downside though, if our support breaks at this level at 1364, which you can tell is a key one, not only because we went to it here, but it was previous triple bottom as well. If we go lower, very poor market structure below, right? We've covered this in last week's video. Gap from 1266 to 1228, and then another gap from 1185 to 1134. Anything below that, 50 SMA is going to provide some support in that area as it starts to creep up. Again, with earnings already passed, I'm not necessarily thinking that it wants to do something crazy and come down here, but again, this is Tesla and anything is possible. So Alibaba earnings a little bit further out in mid-August, it looks like there. But what I want to point out about this chart is just how sloppy it is, right? Very, very gappy, very, very hard to read. I wouldn't really be watching for any specific trades on this chart based on what we're looking at. We have a triple bottom and previous resistance here at 241, the whole dollar, let's just call it, as key support. If we break down below that, remembering that there's a gap here in the chart, the orange lines, ignore the white one, and the 50 SMA is going to be, midway through that gap depending on when we get down into it, if we get down into it at all. So the gap is between 232 and 225. Below that, another gap, very similar to Tesla, remembering that the gap is here, 220 to 216. Those are downside targets if our triple bottom does break here. But again, with the way this one's acted in the past, very gappy, very tough to get a good read on it. It would be fine, in my opinion, if you just stayed away from this one and just played the intraday levels. To the upside, though, if we go over our 251 resistance, and which was previous support in here, if we go above that, maybe we get a move up to 257.92, as we saw happened here and here. Above, we have resistance at 261.84. Happened once here, and then ultimately the all-time high. So very, very tough read on this one. I wouldn't be looking for a trade on it, and if you want to stay away, that's a-okay. So Facebook is one of our big names reporting this week with earnings here on the 29th, I believe it is. Let's see. 29th, so that is on Wednesday, I think. Wednesday sounds about right. 27th is the first of the Monday. So if we go higher based on earnings and we resolve this sort of super support that we're trying to figure out here at 231.73, then we have upside targets here at 238 based on our previous breakout level, and then look at all the times it offered support in this specific area of the chart. Definitely a key one to be watching for and paying attention to. Over that, and we see a move to retest our all-time high resistance level just before it anyways at 247.16, and then 250.15. Above that, of course, blue sky levels, whole and half dollars, as well as any intraday levels that do form. If earnings are negative, cause some sort of negative reaction for price at least, remembering that we could do positive and beat the expectation and still go down. We have key support happening here, 223.65. If that fails, very little market structure, remembering what happened in here with the sort of ad panic, all the way down to 207.13. 200 SMA is going to start to creep up with that level as well, depending on time of week. Anything below that, we have key support at 201.60. And then let's just map out one more below based on, the fact that earnings could do something crazy. Very tough, actually, to pick one out in here, but it looks like this sort of gap that's remaining in the chart could be a potential area. I would just call it in here the fact that we had resistance and the close happened at that price. 194.16 will be the last one below. Again, we're only paying attention to that if earnings send it spiraling downward, which again, not anticipating that it happens, but be prepared for anything. So on NVIDIA, our earnings are a little bit further out. Again, not much of something to be worrying about this upcoming week. Our candle here is indicating to us that we have strong support happening at 389.50. If we see any upward continuation based on the fact that this is a rather large-bodied green candle, we first have to battle back up through 409.14, and then 416.24 will be key resistance above that. If we go higher, we have 423.63, as you can tell by all these touches in here, and then ultimately the all-time high at 431.69. Blue sky territories over that. If we see a rejection here, this upper wick, turns into more than just an upper wick. Maybe we see a red candle, an inverted hammer candle print, and we start to go lower. 402.10 is the first key support. Then, of course, this double bottom that we've now formed at 389.50. Lower than that, we have a previous breakout level that should provide support. 380.17, 50 SMA is going to coincide with it, provide a super support, definitely a first touch bounce at that level. But if we go lower, we have 363.54. Yep. Happening here based on some of these touches, and that's where we'll leave off pre-earnings. So Microsoft earnings not really sending it too far in one direction or another, and this might be a hint for what we see across the board, really. Maybe earnings just aren't very volatile this quarter, so we'll see what happens. But ultimately, we've come back down into our super support trend line and horizontal level, and even the 50 SMA I'd call close enough to sort of start to act as support in this area. That's at 196.50, so that was definitely a buy there on Friday, printing a hammer candle, and ultimately we want to see a bounce to the upwards direction. So being biased in that direction, we have to see over 202.16 for next targets above at 208, 211.13, and then ultimately the all-time high resistance just before at 214.50, above that 216.38, blue sky territories, $1.50, intraday levels that do form. If for some reason that our very strong support trend line and super support area break on the chart, so under 196.50. We're looking at support to come into play at 193.89, just below, based on some of these touches. And then ultimately, again, we have a filling the triangle sort to happen here, where we could see a potential move down to 186.72. If we go lower, 180.08 is next in play, and that's plenty for us to digest this week. So leaving Amazon a little bit further zoomed out, just so you can see how monstrous of a trend it's been, starting at 1,600, let's call it, and going all the way up to 3,344 there. Very, very strong trend here, and just now starting to see a meaningful pullback into this support trend line. Basically what I'm saying is that this pullback could be a buy, but I would ultimately be watching for what happens, coming into earnings here before doing anything with options. If you want to get long equity here, certainly no problem with that for a longer term hold. But again, with options, I would be cautious of this earnings coming up. Let's say our support trend line holds. We want to be watching for a move to retest our 30.6891. After that, double top sort of happening in here at 32.15, and of course the all-time high up at 33.44.29 could all be upside targets. To the downside, though, if this double top is what plays out, and also one thing I want to point out is that we have a high, a lower high, and we also have a set of lows, and now a lower low. So is this the start of more of a correction, more of a pullback? Could be, but we want to see the support trend line break before we get too short biased and too much looking for more of a pullback. But let's say it does break. Say the trend line does break again. One more time, we have a filling up the triangle down to our 27.81. 50 SMA is going to start to provide a super support at that level if we do get down into it. So watch for a first touch bounce at least there. And then we have 26.30 and continuing lower just for the sake of earnings being prepared. 25.15.50. 24.44.92, so I'd just round that up $1. And then down below, our last one that we want to be paying attention to is our very strong support zone from the strong area of consolidation in this period at 23.13. So that's going to wrap up this week's episode of the Weekly Watchlist. If you learned anything new or enjoyed the video, feel free to share it with a friend so they have the same information as you. And also just leave the video a thumbs up or a comment if you want to just let us know as well that you appreciate it. Without further ado, keep in mind earnings and have a green trading week.